Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden messages in corporate filings. And today we're looking at CleanSpark Inc. It seems they've been busy securing some solid funding, but is it enough to power their ambitious growth plans? Before we dive in, if you love getting these straightforward breakdowns of complex financial documents, make sure you hit that subscribe button. And hey, if you want to join a community of like-minded investors discussing these filings, our Discord is linked in the description below. So CleanSpark just dropped a Form 8K, which is basically a report for big events that happen between their regular quarterly filings. Think of it as a company S way of saying, hey, something important just happened and we need to tell you right away. The big news here is an update to a loan agreement with Coinbase. You know, the crypto giant, this isn't a brand new deal, but an amendment like a handshake agreement that got a bit more detailed. Essentially, CleanSpark has secured access to more funding, and it is a significant amount. This is the headline number, folks. CleanSpark's ability to borrow from Coinbase has been boosted to a whopping $300 million. This is a big deal because it gives them a much larger war chest for their growth strategies. Think of it as their fuel tank just got a whole lot bigger, allowing them to go further and faster. Now, how does this work? CleanSpark can borrow either digital assets or cash from Coinbase. And what is the collateral backing these loans? Mostly Bitcoin. This directly links their operational capabilities to the volatile cryptocurrency market. It is a smart move for a Bitcoin miner like CleanSpark, using their core asset to fuel further expansion. So where is all this new money going? They're not just sitting on it. The plan is to pour these funds into a few key areas that are crucial for a company in the energy and Bitcoin mining space. Expanding their energy portfolio means they're likely looking to secure more power sources or build out their own, which is vital for mining operations that consume a lot of electricity. Scaling their Bitcoin mining operations is the bread and butter, meaning more machines, more power, and hopefully more Bitcoin. And finally, investing in high-performance computing, or HPC, is interesting. This suggests they're looking beyond just mining, possibly into other data processing services or advanced analytics that can leverage their infrastructure. When it comes to the cost of this money, it is not a fixed rate for each loan they take. The interest rate, called the loan fee rate, will be decided on a case-by-case basis. This means they have some flexibility, but they also need to be smart about when they borrow and at what cost. It is a dynamic rate that will likely depend on market conditions and the specific terms of each borrowing. The repayment structure is also flexible. Loans can have a set end date, or they can be what is called open, which essentially means they can be ended by either party with a notice. This on-demand feature can be a double-edged sword. It offers flexibility for both sides, but also introduces uncertainty. CleanSpark needs to manage their cash flow carefully to ensure they can repay or manage these loans as needed. Let's talk about security. This is an unsecured debt. The loans are backed by collateral, and what is interesting is the variety of collateral they can use. It is not just dollars or Bitcoin. They can use other digital assets like USD stablecoins or Ether, or even other agreed upon forms. This diversification in collateral is a key part of risk management for Coinbase, and it still puts Bitcoin at the forefront. This is a critical point for anyone thinking about the risk. The collateral they put up is usually worth more than the amount they borrow. This is to protect Coinbase against price drops. They also have margin calls and mark-to-market provisions. In simpler terms, if the value of their collateral drops below a certain level, CleanSpark has to put up more collateral or pay back some of the loan. If they can't meet these requirements, it could lead to default, and Coinbase could seize the collateral. This is a constant balancing act for CleanSpark, especially in a volatile crypto market. This reinforces the previous point. It's not a one-time thing. CleanSpark has to continuously monitor and maintain the value of their collateral. This is where the real challenge lies, especially when Bitcoin prices fluctuate. It requires constant attention and a healthy cash reserve to potentially add more collateral if needed. This is the consequence of not keeping up with the margin requirements. If their collateral value dips, they have to act fast to either add more assets or reduce the loan amount. This can put a strain on their liquidity, forcing them to make tough decisions about where to allocate their cash. And the worst case scenario, if they can't maintain enough collateral, it is considered an event of default. Coinbase then has the right to sell off the collateral to get their money back. This is the ultimate risk for CleanSpark losing their pledged assets. This filing is in response to an announcement made a few days after the side letter was signed. Companies often use these 8K filings to officially back up public statements they made. So the news of the increased credit line was already out there, and this filing makes it official and provides the necessary details. Now let's quickly look at the exhibits. These are the actual documents referenced in the report. This is the core document, the side letter itself, which details the amendments to the original loan agreement. It is the legal blueprint for this expanded credit line. And here is the press release that announced this news to the public. It's good practice to include these so anyone reading the filing can see the company's official public statement. And finally, the interactive data file. This is for the SEC systems and makes it easier for them and analytical software to process the financial information. So, what is the story here? CleanSpark is aggressively pursuing growth, and they secured a substantial credit line from Coinbase, allowing them to borrow up to $300 million. This is fueled by their Bitcoin holdings, which makes sense for a Bitcoin mining operation. The funds are earmarked for expanding their energy infrastructure, scaling their mining operations, and investing in new technologies like high-performance computing. However, this comes with significant risks. The loans are secured by collateral, and the dynamic nature of crypto markets means CleanSpark must constantly manage its collateral levels to avoid margin calls and potential defaults. Failure to do so could result in the seizure of pledged assets, which could be devastating. Looking at the direction, CleanSpark is definitely making bold moves. They're re-leveraging their core assets to fund expansion, which is a classic growth strategy. The investment in HPC suggests a forward-thinking approach, potentially diversifying their revenue streams beyond just Bitcoin mining. The main risk, as I see it, is the inherent volatility of Bitcoin. While it is their collateral, any significant drop in its price puts immediate pressure on CleanSpark's ability to maintain its loan obligations. They need to have a very robust risk management strategy in place, beyond just hoping Bitcoin prices go up. In conclusion, CleanSpark is playing a high-stakes game. They're rebetting big on their future and have secured the resources to make it happen. But the reliance on Bitcoin as collateral means there is always a shadow of market volatility hanging over them. They have the opportunity for significant expansion and technological advancement, but the risks associated with leveraged crypto assets are undeniable. Alright, that is our breakdown of CleanSpark's latest filing. What is your take on this massive credit line and the risks involved? Let me know in the comments below. If you found this deciphering helpful, please give this video a thumbs up, and if you want more deep dives into corporate documents, make sure you are subscribed. Don't forget to join our Discord community, the link is in the description. Thanks for watching, and I'll see you in the next one.